So here is the study guide for the final exam. So as I've mentioned to you, I've provided you everything that you need, right? So whatever format you want to use, if you want to take the time over the weekend to plug in all your formulas in the Microsoft Excel sheet, spreadsheet, whatever you want to do to help you get ready for the final exam, do by all means, okay? Now, with that being said, this is what I'm going to provide for you when we actually do the actual exam is I'm going to give you a few scenario questions here, right? Exactly 10. In this case, it's roughly 10. I'm going to provide you a chart of accounts, okay? I'm going to provide you a journal, the ledger, an unadjusted trial balance. Um, in this case, a periodic or perpetual, that's going to be something that you're going to have to find out on your own. A depreciation table, an income statement, the rest, right? I already showed you. I'm going to provide all that spreadsheets for you. So all you have to do is just go ahead and look at everything that I taught you throughout the entire class project and apply your learning, because that's the whole purpose of bookkeeping and being an accountant. If you're trying to do financial accounting, this is what you have to do. You have to bookkeep every business transaction, and you have to create the financial statements at the end and close out the accounting period so you can start all over. So with this case right here, let's go ahead and dive right into the scenarios, okay, and start practicing how to do all this one at a time, okay? So, all right. So here on August 1st, you decided to borrow $15,000 cash from the bank for your business. Okay? So you borrowed $15,000 cash from your bank to start up your business. So what did I do?
You got cash and then business loan.
You did cash and you took a business loan. So cash is 102, business loan is 210. So let's journalize that. So August 1st, you received cash and you took a business loan for $15,000. Okay. You can make your note here in this case. This is for practice purposes only. So in this case, borrowed I don't know. In this case, the descriptions are subjective. Okay, so in this case, what did I teach you? After you journalize, what's the next step?
Go to ledger and update each account that we just journalized.
Okay, so in this case, here's your cash account. PR, first page. Okay. And then I need to go to my business loan. Okay, here we go, business loan. Credit for 15,000. Okay. So let's see what happened next. August 3rd, you deposited 12,500 cash into your checking account.
So some of the money we have went into the checking account.
Okay, so chart of accounts.
We have a cash and a checking.
Right, because we're depositing our cash into our checking account. So which one goes first, checking or cash?
Checking first because it's debiting.
Yes, we're increasing our checking account. Let's see, was it account 101? Yes, account number 101. Okay, and we're depositing 12,500, right?
Yes.
And we're going to be crediting our cash because okay. Okay, deposit cash into banking account. Okay, so next is ledger. So in this case, right, we deposited 12,500. So now we have 12,500 cash in our checking account. And then we're going to credit because we had cash in our hands. Now we put majority of the money into the bank. So therefore, I put in 12,500. So what's my account balance going to be now in my cash account?
$2,500.
Right? So in this case, formula, right? Whichever one that you use, whether you use Excel or not, right? We're going to subtract 1250 from my 1500. I'm sorry, 12,500 from my 15,000. So I should have 2,500 left. Okay. Next scenario, what happened next on August 5th? You paid 1,500 for rent with a check.
So we cut the check for the lent.
Okay.
So there is a checking for cutting a check, and then lent expense.
Good. 610 rent expense. Now in this case, I'm not going to make it super detailed because the whole point of this scenario is to get the main concept down, which is, can you journalize a transaction? Can you post it to the ledger, right? So in this case, I don't have a check register. I don't even have the vendor's name. That's okay because the general idea what I'm trying to get is, again, can you look at a transaction, identify what it does, use a debit credit system, right, using transaction analysis, and determine how to journalize it? In this case, there you go. We paid for rent, so we have a rent expense, and we wrote a check, so that comes out of my checking account. Straightforward. Okay, so rent expense 610. It is 8/5 now. Rent expense 610, right? Because it's an expense account, right? You're supposed to debit expenses. And because you're decreasing your checking account, okay, for $1,500. Okay? And your note here could be pay rent, check number 1. Okay? So in this case, I used money from my checking account to pay for rent. So ledger. Here's my rent expense. For $1,500. And you took money out of your checking account. Which credited your account for $1,500. So how much money should you have in your bank account?
11,000.
Good. You have 11,000 left in your bank account. Okay. Now it's August 8th, and you decided to purchase 100 coffee mugs for $1 each on an account. Okay. Here, it says right here, you're going to be using periodic FIFO. Okay. And your freight cost you $25. So you have a few key terminologies here. You're going to be using periodic FIFO to keep track of it. And the costing method is FIFO. And of course, you purchased 100 coffee mugs for $1 each on an account. Freight was $25. So, chart of accounts. How am I going to record the purchase of periodic inventory?
We put them in the expense account.
Good. So in this case,
We use the purchase expense for the cost of the mug, and then we use the freight expense for delivery fee.
okay.
And then we put it on the account, so balance goes to the account payable.
Good, right? Because we purchased it on in an account. Okay, so we're going to put it on accounts payable, which is account number 201. So 605, 601, and 201. Okay. And are we on the 8th now? Yeah, the 8th. Okay. Okay. So in this case, how many items did we purchase? So in this case, we purchased 100 mugs at $1 each. Okay. On an account. In this case, I'm not going to go through terms or anything like that, right? Very simple transactions. Okay. So in this case, what's my purchase expense account going to be?
$100.
Right? How much was my freight?
$25.
So how much do you owe?
$125.
$125. Okay. So again, let's go ahead and plug that in my ledger first. So in this case, we're dealing with purchase expenses. Here's purchase and freight. Okay, so purchase. for $100 because it was 100 mugs at $1 each. Okay. Freight expense. Excuse me. Which cost you $25. Okay. And that left you here at accounts payable. With a credit of $125 that you owe to some random vendor. Okay. Now, since we know it's going to be periodic inventory, I have also put in a periodic inventory worksheet. For the scenario that you get in the class, you are going to determine, is it periodic or is it perpetual? And then you're going to have the option to choose one of them. Right? And then, of course, you're going to have to provide that sheet on your own, whether it's periodic or perpetual. I'm not going to give you that one for there. So you need to know how to do both of them. So in this case, we know that the costing method is FIFO. Item that we purchased is mugs. Okay. Today is the 8th of August. We purchased 100 of them at $1 each with a freight of $25. So in this case, what's my purchase price?
$100.
Total cost?
$125.
Right. And because I'm using FIFO, do I need to solve for my costs per item?
It's $1.25.
Good. Notice this, I'm not going to go through all the formulas because all of these are things that we have practiced for the last 15 weeks. Well, 14, because you got 1 week left for everything else. So I'm not going to go over through any of the formulas or anything because these things you should have already known because we practiced it so many times already. Okay? So there you go, 125. Okay. Next, on August 10, okay, we end up purchased $65 worth of supplies with cash, okay, because we still have cash on our hands. So we purchased $65 worth of supplies with cash. So, chart of accounts. What did I do?
No.
Oh, were you talking?
Yes.
Okay, no, we did not catch any of that.
So there's an asset. We bought the asset surprise.
Okay,
So
good.
105.
105.
And then we used the cash to pay for it.
Excellent. So in this case, we bought $65 worth of supplies. So I can go ahead and put in the date. It is August 10. We purchased supplies. And we spent cash for $65. This one is, I'm not going to put a description because it's already straightforward. You bought supplies for $65. There's no real description to put in there because we don't know what kind of supplies these are, right? So I'm going to leave it like that. So pop into your ledger. Okay, here are supplies. Right, we bought 65, so we debited our account by 65, but we had to spend our cash, so we have to reduce my cash. So what is my new account balance in my cash account?
$2,435.
Yep. Okay. August 12th. Okay. You bought a cash register with cash for $285.60. Notice here, no sales tax was charged. Well, in this case, it's included. Okay. So there you go. You bought a cash register with cash for $285.60. Okay, and this is August 12th. So let's take a look at my chart of accounts. So what did I do?
We bought the asset called the cash register,
Mm-hmm.
and we again used the cash to pay for it.
Good. So it is the 12th now. We purchased a cash register and we paid it with cash. For $285.60. Right? $285.60. Okay. Now in this case, same thing from the previous one. There's really no description. We're going to say you purchase a cash register. It's already obvious. So in this case, I have to go to my ledger now. Here we go. Here's my cash register. Today's the 12th. Still on the first page of the journal for $285.60. Okay. And we need to update our cash account because we end up spending to purchase the cash register. Which cost you $285.60. So what is your account balance in your cash account?
$2,148.50. Oh,
Wait.
no, 40 cents.
Yeah. $285.60.
Yes.
Okay, good. All right, for $2,149.40. Okay. All right, so let's see what happened next. Now it is August 16. We're almost there, halfway there. August 16, okay? You sold 25 mugs for $5.99 each for cash. Sales tax was 8.25%. Okay? So, you sold 25 mugs for $5.99 each for cash, and sales tax is 8.25%. So what am I going to journalize here?
We got some cash,
You got some cash, so 102, good.
and then we made some sale,
Good, 401.
and then we collected the sales tax.
Good, 205, sales tax payable. Awesome. Okay, here you go. Today is August 16. We received cash. We sold. And we charge sales tax. Okay. So if you sold 25 mugs, okay, what was the price I sold it for?
25 times $5.99 is $149.75.
Good. So in this case, how much tax am I going to be charging?
Mine came out to be $12.35.
Good. So in this case, how much cash did I collect?
$162.10.
Good. 162.10. Okay. So now, right, we completed our sales. So now what? We need to plug it into our ledger, right?
Right.
So we received cash. So right here, we're already left off on cash. So it's the 16. And I'm going to put sales. And we gained cash for $162.10. So therefore, how much cash do I have now?
2311.50.
Good. Now we actually have to recognize sales. So we got equity, income summary, sales. Here you go, sales. For the 16. Sold 25 mugs for $149.75.
Yes.
Oh, credit 149.75. Okay. And then we need to go to our liabilities for the sales tax payable. So how much sales tax did you collect?
35. Yes. 12.35.
$12.35. Okay. Now, question to you: do I need to do a cost of goods sold? Yes or no?
Not yet.
No.
Not until we close the book, the the cycle.
Yes. So good. Because we have periodic inventory, that means you don't need to keep track of the inventory or update your inventory worksheet. So in this case, therefore, we don't even need to have a cost of goods sold to update our inventory journal entry. We just leave it as and only record the sales. Okay. So then on the 18th of August, what happened here? A customer returns 3 mugs for a full refund in cash. Okay. A customer returns 3 mugs, full refund in cash.
So we took some cash out to pay back to the customer,
Okay.
and we also reduced the amount of the sales tax collected.
Yes, so we have to
by
give back the
returning-
sales tax. Good.
And then we have a sales returns and allowances.
Yes, good. So 405, 205, and cash back for 102. Okay. So in this case, today, I didn't even record the day. I think it was the 18. Yes, the 18. Okay. A customer decides to return, right? So therefore, what comes first?
Sales returns and allowances.
Sales returns and allowances. Okay. We have to give back the sales tax money back. And we're paying this person with cash. So again, a customer returns 3 mugs, full refund. Okay. So, how much would be the total sales returns if we sold each mug at $5.99?
So 3 times $5.99 equal to $17.97.
Good.
And tax on it is $1.48.
Okay, so how much cash are we actually giving back?
$19.45.
$19.45. Okay. So in this case, $17.97 and $1.48. So I'm gonna go to my ledger. And I have to go through all the accounts, starting with my sales returns and allowances on the 18. Okay. We returned it for $17.97. We have to give a portion of the sales tax money back. So here's sales tax. It's the 18. Which decreased it by $1.48, was it? So what is your now new sales tax payable account balance?
$10.87.
$10.87. And we also need to reduce the cash because we had to give a cash refund. Okay? So 818 for refund on 3 mugs, which decreased your account by $19.45. So, what is now your account balance in your cash account?
2292.05.
Good. Okay. So, does this sales affect your inventory? This return, does it affect your inventory?
No.
No, because we never kept track of the sales in the first place. So, in this case, no, nothing was there. Okay. So then now we are on August 20th. August 20th, you end up selling 50 mugs for $5.99 to customer A on an account. Okay, sales tax was 8.25%. Okay, so it's the 20th. You sold 50 mugs to customer A on an account for $5.99 each. Sales tax was 8.25%.
So we made the sale.
We made a sale, so
And
401.
we also collected the sales tax payable.
205, got it.
But we are putting the balance on the account receivable because they asked, the customer wanted.
Good. Perfect. So they got the items on an account. So in this case, I am done with page 1. So I'm going to start on page 2 for August 20th. Okay, so we have an account receivable. We sold cups and collected sales tax. Sales was 401, sales tax was 205. And we sold 50 mugs to customer A. Okay. So if we sold our mugs for $5.99 each, what was my grand total sales?
$299.50.
Good. How much sales tax did we collect?
I believe it's $24.71.
Good. So therefore, how much does customer A owe me?
The balance is $324.21.
Good. So now we have an accounts receivable account right here, account balance, customer A. Oh, we're on the second journal now. For a total of $324.71. Oh, $324.21, not 71, sorry. 324.21. We sold, so we have sales. Your sales. How much was the sales for that?
$299.50.
Okay. So what's my grand total sales?
44925.
Good. Okay. We also charge sales tax on this sale. For a total of 20. Okay, that's the one I got. 2471. So what's my sales tax payable now?
$35.58.
3558. Okay. All right, next one we have here. So we just did the 20th. On the 22nd of August, we end up selling 10 mugs for $5.99 each for cash. Sales tax was 8.25%. So what we did was we sold 10 more mugs for $5.99 for cash. Sales tax was 8.25%.
So we also earned the cash.
Okay,
We made the sale,
good,
and then we collected sales tax.
good. So in this case, we've already done a previous transaction before. This time it's August 22nd. And we sold only 10 mugs this time. Okay. So total sales. What is my total sales if I sold 10 mugs? And they're priced at $5.99.
$59.90.
How much tax did I collect?
$4.94.
$4.94. So I collected a grand total cash of
$64.84.
$64.84. So $59.90, $4.94, $64.84. Okay. So go to your ledger. We received cash first. For sales. And we received 64.94. Let me
No, 84.
84. Let me double confirm. 64.84. Good. 64.84. So therefore, how much cash have I received?
Now we have $2,356.89.
Mm-hmm. Okay. So let's see what's next. We sold okay, here's my sales. Sold 10 mugs, which cost me $59.90. So, how much is my total sales now?
$509.15.
Good. We also collected sales tax money for the sales. It's August 22nd. We had sales, which collected $4.94 worth of tax. So therefore, how much tax money do I have now?
$40.52.
$40.52. Okay. So let's see. We're going to do this one last transaction because the rest, well, they're not, the last two are for surely adjustment entries, but we got to take a break soon. So in this case, let's go ahead and just do the 25th here. 25th, you end up paying for the purchase of, wait, I wrote the wrong one. 25th. Okay, 25th is customer A decides to pay in full for the amount that they owe you with a check. Okay, so 25th of August, customer A decides to pay me in full with a check. So what account am I going to be using?
We deposit the check to a checking,
Yes.
and then we deduce the account receivable.
We're going to reduce. Yes, reduce the account receivable. So in this case, it is August 25th. Okay. We received money and we're going to put it in our checking account because it was a check. And we're going to reduce the accounts receivable for how much? Let's take a look when we sold to customer A. So in this case, we sold to customer A on the 20th of August. Here, we sold 50 mugs, charged the tax. So right now, how much does customer A owe me?
$324.21.
Okay, so that's how much they're going to pay me. $324.21. Okay. And then I'm also going to put in here, since we didn't give customer A any terms, again, I'm not going to make the scenario as complicated as possible. So in this case, very simple, basic transactions. So in this case, customer A paid in full with a check. Okay. Not given a check number, but that's okay. We don't need to be given a check number, okay? We just know that we were given a check, so therefore it's going to go straight to my checking account. Okay. So there we go. I'm going to go ahead and update my ledgers here that I received a check. So checking 825, deposit check. Okay. For 324.21. So therefore, how much money should I have in my checking account?
$11,324.21.
Right. Good. And then I'm going to reduce my accounts receivable because customer A decided to pay off for what they owe. So then I'm going to put customer A paid in full for 324.21. So therefore, account balance is now 0. Okay? Because we charged them, they paid for it. Now there's no one else that owes me money. Okay? So let's go ahead and do the very, very, very last one here, which is going to be August 30th because there's 31 days in August. So the last 3 transactions are adjustment entries. Okay. So here, August 30th, you end up paying for the purchase of the coffee mugs with a check. Okay. So in this case, I'm paying off the purchase of the coffee mugs with a check. So what am I going to be doing?
Cutting a check from checking,
Uh-huh.
and then we are also reducing the account payable.
Right, because this time when we purchased our inventory, we placed it on an account. So now we owe money to this vendor. So now that we're going to be paying for those coffee mugs now, that's where I'm going to be reducing for what I owe. Okay, with an accounts payable 201. Okay. So again, accounts payable, I didn't do any purchase discounts or anything like that because no need to. Again, very simple. Today is August 30th. Okay. We're paying for what we owe. So accounts payable. Okay, 201. And then we're paying with our checking account, 101. Okay. And how much do we actually owe? Let's go ahead and locate where we made the purchase in the first place. Here on August 8th, I purchased my coffee mugs, 100 of them for $1 each with a freight of 25. So how much do I actually owe for the purchase of coffee mugs?
125.
We owe 125 and we're going to pay 125. Okay. And then I'm going to go ahead and say paid for purchase of mugs on August 8th. Okay, with a check. Or I guess, or what was it? Check number 2, I guess? I think so. Yeah. Okay. Check number 2. So now I'm going to pay for what I owe. And I'm going to reduce my checking account by $125. So accounts payable first. Here's my accounts payable account. Today's the 30th. Paid in full for purchases on 8/8. General Journal page 2. We're paying, so we're going to decrease my account by 125. So therefore, my account balance should now be 0. And we paid with our check. So it's going to come out of my checking account. I guess I'm gonna just put purchase of mugs. In this case, I didn't use check number, so I guess I'll use check number 2 now. Still on page General Journal 2. And we paid $125. So how much money should I have my checking account?
$199.21.
Okay, $199.21. Okay. So like I mentioned, okay, so we're done here for now. So I'm going to mark here. So that means we still have 3 adjustment entries. So this we're not going to complete yet. We will complete later on. So right now I'm going to stop here for a break. Okay. So